Welcome to one and all. Myself Ganeshan K, Assistant Professor of Commerce, subject Corporate Accounting, topic Profit Prior to Incorporation. So in this session, I am going to solve problem of profit prior to incorporation. In the earlier sessions, we have discussed about the various types of expenses to be apportioned on the basis of time ratio, sales ratio, weighted time ratio, then revised time ratio, then expenses meant purely for pre-incorporation and expenses meant purely for post-incorporation. Now, let me solve a problem, okay, pertaining to profit prior to incorporation. Wakdevi company was incorporated on 1/5/2012 to purchase of business from Ganga on 1/1/2012. The accounts were made up to 31st December 2012. The trading and profit and loss account is as follows. To opening stock 26,000, to purchases 1,82,000, to gross profit 60,000, by sales 2,40,000, by closing stock 30,000, total 2,70,000, 2,70,000, to rent and rates 3,600, to directors fees 4,000, to salaries 10,000, to office expenses 10,000, to travelers commission 2,200, to discount 3,000, to bad debts 400, to audit fees 500, to depreciation 1,200, to debenture interest 900, to interest on PC up to 31/8/2012 3,200, to net profit 21,000, by sales 2,40,000, by closing stock 30,000, by gross profit 60,000, total 60,000, 60,000. It is ascertained that the sales from January 2012 to April 2012 were 60,000. You are required to apportion the profit between pre-incorporation and post-incorporation period. Now, see, whenever problems of this type is given in the examination, right, our first step is to calculate time ratio and sales ratio. ನಿಮಗೆ ಪ್ರಾಫಿಟ್ prior to incorporation ಪ್ರಾಬ್ಲಮ್ಸ್ ಬಂದಾಗ ಮೊದಲ ನಮ್ಮ ಕೆಲಸ ಏನು ಅಂದ್ರೆ ನಾವು ಏನು ಕ್ಯಾಲ್ಕುಲೇಟ್ ಮಾಡಬೇಕು ಹೇಳಿ, ಟೈಮ್ ರೇಷಿಯೋ ಮತ್ತೆ ಸೇಲ್ಸ್ ರೇಷಿಯೋ. ನಾವು ಕಾನ್ಸಂಟ್ರೇಟ್ ಹಿಯರ್. ಬಿಸ್ನೆಸ್ ನ ಯಾವಾಗ ಅಕ್ವೈರ್ ಮಾಡ್ಕೊಂಡ್ರೆ ಹೇಳಿ 1/1/2012. ಯಾವಾಗ ಇನ್ಕಾರ್ಪೊರೇಟ್ ಆಗಿರೋದೆ 1/5/2012. ಹಾಗಾದ್ರೆ 1/1/2012 ಇಂದ 34/2012 ಎಷ್ಟು ಮಂತ್ಸ್ ಆಗುತ್ತೆ ನಮಗೆ? 4 ಮಂತ್ಸ್. ಹಾಗೆ 1/5/2012 ಇಂದ 31/12/2012 ಗೆ ಎಷ್ಟು ಮಂತ್ಸ್ ಆಗುತ್ತೆ ನಮಗೆ? 8 ಮಂತ್ಸ್. ಸೊ 4:8 or 1:2. So pre-incorporation period will be what? 4 months. Post-incorporation period will be what? 8 months. 4:8 or 1:2 is over. Later on, in the second step, they are calculating what? Sales ratio. So what was our total sales as given in the problem? 2,40,000. Read the adjustment here. It is ascertained that the sales from January 2012 to April 2012 were rupees 60,000. So if you read the additional information, it is ascertained that the sales from January 2012 to April 2012 were 60,000. What was your total sales? 2,40,000. Okay, okay, of this your pre-incorporation sales will be what? 60,000. So 2,40,000 minus 60,000. How much we are getting children now? 2,40,000 minus what? 60,000. So how much we are getting children? 1,80,000. So your sales ratio will be 60,000 is to 1,80,000. 1:3. Yes, observe carefully, my dear students. Now I will discuss with you about the expenses which are to be apportioned only for pre-incorporation as well as what? Only for post-incorporation, and expenses means to be apportioned only for sales ratio, means all your expenses relating to sales will be apportioned on the basis of sales ratio. All your fixed expenses will be apportioned on the basis of time ratio. Now let me discuss one by one. To rent and rates, time ratio. Okay, please note it. To rent and rates, fixed expenses, time ratio. Directors fees, okay, only for post incorporation. Salaries, fixed expenses, time ratio. Office expenses, fixed expenses, time ratio. Travelers commission, selling expenses, sales ratio. Discount, selling expenses, sales ratio. Bad debts, selling expenses, sales ratio. Audit fees, post incorporation. Depreciation, fixed expenses, time ratio. Debenture interest, post incorporation. Interest on PC, revised time ratio. So based on this, now we are apportioning the expenses. Your time ratio will be 1:2, right? Similarly, your sales ratio will be 1:3. What you must do means, see, you must take, for example, let me say rent and rates given in the problem 3,600. I told you very clearly it is time ratio. What is the time ratio here now? 1:2, right? 3600 into 1 by 3. Okay, 3600 into 1 by 3. So we are getting 1200. In the second case, 2400. So all your, I repeat once again, all your fixed expenses should be apportioned on the basis of time ratio. What's the ratio? 1:2. Okay, accordingly, rent and rates 1200, 2400. Directors fees, post incorporation 4000. Then salaries, once again time ratio 1:2, 3333, 6667. So what was your salaries? 10,000. So 10,000 into 1 by 3. Okay, you can calculate it. Okay. Similarly, office expenses 1:2, 3,333, 6,667. Then commission sales ratio. What about commission? Sales ratio, no. So what is our sales ratio? 1:3. So your bad debts, right? And then commission, then discount. Okay, should be apportioned on the basis of sales ratio. I mean to say 1:3. Then debenture interest, post incorporation, interest on PC. Okay, that is revised time ratio. That is 1:1. So 1600, 1600. Then whatever the difference you get, that will be the profit. In the first column, we get pre-incorporation profit 3,734. The second column, we get post-incorporation profit 17,266. So pre-incorporation profit should be transferred to capital reserve. Okay, whereas post-incorporation profit to be transferred towards profit and loss account. Pre-incorporation profit is a capital profit, whereas post-incorporation profit is a revenue profit. Pre-incorporation profit cannot be utilized for payment of dividend to shareholders because shareholders are no way concerned with pre-incorporation profit. Thank you.